This is the Asia Train. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Hong Kong. The top stories this hour. Asian shares are set for a weaker open after US stocks and bonds fall, with strong economic data blurring the picture on Fed rate cuts. The Bank of Japan expected to stand pat today amid political uncertainty. More big tech earnings in focus. Investors are unimpressed by Meta spending guidance despite a sales beat. Microsoft also slipping on a disappointing cloud growth forecast, and Samsung is due out to report this hour. Plus, BYD notches another win over Tesla, the Chinese giant beating its US rival on quarterly revenue for the first time.
We do have breaking news at the moment. We are getting industrial production numbers out of South Korea. As a fall for the month of September, economists were actually expecting it to rise. We're talking about a fall of 0.2% month on month. We're expecting a rise in auto exports to have helped the numbers, but it doesn't seem to have actually been seen through the month of September. Year on year, we're also talking about the output falling 1.3%. The estimate was also for a small gain. So we have seen that deceleration in export growth for the month of September, and we're now seeing that reflected in the South Korean industrial production numbers. We do also have an alert on the Bloomberg right now. We are hearing that North Korea appears to have fired a long-range ballistic missile. This, according to the South Korean Joint Chiefs of Staff, talking to us in a text message, that North Korea has fired a suspected long-range missile at a lofted trajectory. Yonhap was saying that this could be a suspected intercontinental ballistic missile. Of course, this will have implications for how far it can go, whether the trajectory is through Japan or towards the United States, and of course, a lot of implications for the markets as well. Heidi will be watching those defense stocks.
Yeah, and Shery, what a time to be sort of contending with the saber rattling from North Korea as well, right? Given the ongoing political uncertainties within Japan, the political uncertainties going into the US election next week as well. And that's really the state of play as we kind of gauge these markets as we set up for this Thursday session. Taking a look at Australia just coming online, we're sort of trending a little bit to the negative at this point. And we're, of course, watching to see if there's further repricing of RBA expectations given the inflation data that we had out yesterday, perhaps pushing a little bit more of that door ajar for sooner than expected easing. That sort of fourth quarter picture is looking a little bit up in the air at the moment. When it comes to some of the tech heavy gauges, we are expecting that weakness to play through. Of course, Samsung will be a big theme, but as we mentioned at the top, the likes of Meta, heavyweights like Microsoft, really seeing that disappointment across the Nasdaq 100. Chicago Nikkei futures looking a little bit softer at this point, and dollar yen watching all of those geopolitical implications at that 153 level. We're also potentially seeing a bit of weakness there when it comes to Chinese related stocks, despite some of those outperformers in those US-listed Chinese stocks out overnight. Take a look at what we're watching when it comes to US futures as well as treasuries as we continue to see that pressure on not just the treasury market but global bond markets. One gauge of global bonds really seeing the weakness that we've seen, and the weakest, I should say, in about 3 months. And Nasdaq 100 futures, you can see that sort of downside when it comes to the tech theme as well continuing to play out. Final note on crude as well, we're seeing geopolitics, particularly when it comes to what comes next in these conflicts in the Middle East, starting to play again into that oil price, Shery.
Yeah, and Heidi, delving deeper into those tech earnings, take a look at how Meta and Microsoft are trading after hours. We're seeing both stocks now falling more than 3% at the moment. Really interesting because we had seen some earlier disappointment with Meta, but Microsoft has actually gained ground on its cloud computing business and office software. But right now we're seeing that downfall of more than 3%. Meta's earnings, as I was saying, failing to inspire investors even after its projected stronger than expected holiday quarter sales. And Microsoft's hefty bet on cloud computing seems to be paying off after reported stronger than projected revenue growth. For more, let's bring in technology reporter Kurt Wagner. Kurt, so it seemed like a solid quarter. Let's start with Meta. Revenue beat, guidance beat. So why are we seeing this downside pressure on the stock in the late trading session?
You know, we've continued to see this sort of tug of war at Meta between these long-term bets that Mark Zuckerberg talks about, AI, AR, things like that, but the short-term sort of focus in business, right, which is the advertising business that drives the vast majority of revenue. And I think that's probably what you're seeing here. They talked a lot on the call about how they continue to invest significantly in infrastructure, how they're going to continue to lose money on these long-term bets into the future. And I think when you're, sitting there looking and seeing this future where they're continuously spending heavily and losing heavily on those things, I think that's just wearing down on the stock right now.
Meta didn't divulge range when it comes to 2025 budget, but did we get any hints on what spending going forward might look like?
Yeah, so this year they're going to have total spend right around $100 billion. I believe it's 96 to 98 billion. They said they are still working on their 2025 budget. They said that repeatedly because they got several questions about it. But they did hint that, again, this spending is going to continue to increase significantly. They talked specifically about infrastructure costs and how that's going to continue to increase. They have these large language models. They're well underway on language Llama 4, which is their newest one that isn't yet out. And so I think we're going to see well over $100 billion, I would imagine, next year in spending, because they're almost to that number right now.
And Kurt, before we let you go, Microsoft also falling after hours. What are investors focusing on right now?
Yeah, it seems they talked a lot about AI as well. It's certainly a theme across the tech industry, but it seems like maybe the concern has something to do with that cloud business you were talking about. They did say that they were sort of supply constrained right now, right? Everybody is trying to get this power, get these data center capacity up and running. And so it sounds like part of the issue is that they are trying to figure out how to get more supply there to meet the demand that they want, right? And so that's in some ways maybe a good problem to have, but obviously in the short term, not ideal for them to be in that situation.
Our technology reporter, Kurt Wagner, there was staying with earnings, and Samsung due to report final third quarter results within this hour, and that's after the preliminary sales and profit missed expectations. Our tech reporter, Annabelle Jewellers, is here with more. So in this set of numbers, what are we watching?
Well, today, as you said, we've already had sort of the prelim and that indication that really the third quarter isn't going to be that great for the company. Today is about getting the net income and the divisional breakdown. And so, as you said, the results that we had already, not great. We even had actually the rare apology from the company itself, sort of acknowledging, yeah, we're actually falling behind in some really key areas. And the really key area for the business is HBM, or high bandwidth memory chips. And this is an essential part of AI infrastructure. And here, as many people are familiar with, Samsung is really falling behind SK Hynix in this space, and that is starting to have a big impact here. And so our Bloomberg intelligence team is saying, for instance, this could persist for at least the next 12 months. And SK Hynix is a company that's actually booked orders going into 2027. So their outlook for HBM is strong. We really need to see Samsung playing catch up in this space.
Yeah, it was really interesting to see those South Korea's industrial production numbers really disappointing to the downside. What could that really potentially tell us about Samsung and its export projections?
Yeah, exactly. We've had sort of a range of economic indicators that have sort of suggested to us that really the outlook for Samsung is not looking great. Something else, for instance, is the production volume for chips, communication and office accounting. And Samsung takes a lot of revenue from these areas. And again, over the past few months, we've seen that trending downward, even though the expectations is still that Samsung can deliver profit growth of 18% on the quarter. So, yes, there's really just that sense that's building here that Samsung could be missing its AI moment. And that's very key for the company because, of course, Samsung, it's not just trying to build out HBM, it's also trying to build out its foundry business. And this was something that they actually wanted to compete with the likes of TSMC. But actually, if you take a look at a terminal chart we have, you can see just how much Samsung has fallen behind TSMC in this space because the market cap really just does not compare. You can see they're really pulling away TSMC, that foundry giant in Taiwan.
Yeah, Annabelle Jewellers there with what to expect from Samsung as we get that divisional breakdown as well later this hour. You can also turn to your Bloomberg for more analysis and other tech results as well. Go to TLIV Go to get commentary and analysis from our expert editors. And coming up on the Asia Trade, why former BOJ board member Sayuri Shirai expects no policy changes from the central bank. We talk chip curbs with Tufts University and unpack how Taiwan's tech industry is impacted by the U.S. presidential election. Plus, we discuss the fallout of the LDP coalition's election loss on Japanese equities with UBS SuMi Trust Wealth Management. This is Bloomberg. take a look at how the Japanese yen is trading at the moment. It's a fourth day that we're seeing the yen top that 153 level against the U.S. dollar. We're headed now for the worst month since 2016. Dollar yen 14-day RSI now in overbought territory. The BOJ today not expected to do anything. Almost all 53 BOJ watchers predicting a stand pat decision. Let's bring in our next guest, who's also expecting no change. With us now is Sayuri Shirai, professor at economics at Keio University. She previously served as a board member at the BOJ. Always great to see you.
Thank you.
So if we're not expecting any change on the benchmark rate, what will you be watching?
I like to hear the view from governors, how he thinks about this excessively cheap yen. We started to have another cheap yen again. So he said, there is no, there is a time before they can consider another hike. But still, 153 is excessively cheap yen. So it's much cheaper than, in August. We had like 142, 143. So this is really having adverse impact on inflation, right? So,
which will really push up inflation, which will push up import costs, right?
So there's a contradiction here.
Especially since the July rate hike also happened because partly of a weaker yen.
I think mainly because of that. Of course, BOJ will not say that, but because they admitted that yen's depreciation is creating kind of bad cost-push inflation.
And the political picture right now with the ruling coalition losing its majority, that's actually weakened the yen even more. Will that have policy implications?
Yes, it looks like it, because no political parties talked about this, excessively cheap yen and its impacting on inflation. Also, everybody talked about price hike, and so they have to give some subsidy through fiscal policy, but nobody really touched on this excessively cheap yen, right? So meaning that maybe BOJ will maintain this policy. So that's why that leads to the depreciation of yen at this stage, because the BOJ cannot take a countermeasure at this moment.
When it comes to wage growth, wages are growing, but real wage growth is starting to weaken, right? Do you think that we've gotten to a point where perhaps that could really stagnate? And where are we at with the virtuous cycle? Is there a big risk there?
So wages are growing at 2.8%, and it's not very bad. But because inflation is higher, and again getting higher because of the another yen's depreciation, so import prices are coming up. So in that sense, nobody really feel the real wages are growing. So that kind of situation is likely to continue. So people do not really see wages are going up, so they can consume more. That kind of virtuous cycle is not evident existence at this stage.
And you don't think increasing the minimum wage, which of course is being discussed from many sides politically, that's going to help? Is that just going to potentially force out a lot of the companies that are really struggling with inflationary pressures?
So all the political parties talked about increasing minimum wage as if it can be a solution for raising consumption. But the minimum wage is like a legal wage payment. And then, a lot of companies are struggling from cost-push inflation and additional, legally binding wage growth. Many companies may not survive. So I just wonder, all these political parties, whether they really thought through, the very sluggish labor productivity growth, how can they increase minimum wage? And I don't think that will be a solution to increase consumption.
There's two arguments, it seems, right now with what's happening in the political instability here in Japan. One, if you have the yen weakening more, the BOJ might have to faster tighten policy. But at the same time, on the other side, if you have too many cooks in the kitchen, will Ishiba be able to actually allow the BOJ to do its job?
Yeah. So the difficulty is, Ishiba-san already said, Japan is still not out of deflation. This is a repetition since Abenomics, right? And actually, more than 2 years.
He sort of changed his tune after he was elected.
Yeah, he changed. So he said, okay, consumption is so weak, and he said at this stage, maintaining low interest rate should be, right? If he said that and he keeps saying that real consumption is so weak, I mean, how can he justify about this raising interest rate? So that makes the BOJ's decision very difficult.
How much is it also about the U.S. elections? There's a lot of arguments right now that a Trump victory would mean more yen weakness.
Yeah, I think BOJ is very much worried about the case of Mr. Trump is winning because it may lead to the dollar strength, higher interest rate, so it makes the Japanese yen much cheaper. So that makes their policy decision very, very difficult. So dilemma is getting bigger.
Do you expect to see more wage growth next year? The Labor Federation here has said they will ask for 5%. What is sort of the level that we need in order to get the sustainable growth?
So if we want to achieve 2% inflation and the real wage growth should be positive, then nominal wage growth should be 3%. Right? But right now, April to August, average inflation is at 2.9%. Right? It's good, but everybody really worked hard to raise wages. And then if you talk to a lot of small medium enterprises, a lot of companies say it's very difficult to continue simply because the economy is stagnant.
Right. So Shirai-san, after the shows, I'm actually headed to the BOJ, and we have investors trying to go through the statement. What should I be watching?
So, yeah, I really want to see whether maybe especially press conference, what Mr. Governor Ueda is going to talk about this excessively cheap Japanese yen, resurgence of Japanese cheap yen, I'm sure everybody asks, and then what the implication is a cost-push inflation. So is the BOJ is going to deal with that like they did in the past?
Sayuri, Shirai, good to have you with us, Professor of Economics at Keio University, with a preview of that BOJ decision to come later today. And of course, you can actually go to TLIV Go for more commentary. This is for subscribers. You can also watch us live. TV Go is your function. Join the conversation. Send us instant messages as well. We'd like to hear from all of our viewers, so we've put together a short online survey. You have that QR code on your screen right now, so do tell us how you feel about the shows and any other suggestions that you may have. This is Bloomberg.
Chinese electric vehicle maker BYD has notched up another win over Tesla, reporting quarterly revenue that beat Elon Musk's car maker for the first time since the pair have gone head-to-head in global sales. Our China correspondent Min Min Lo joins us now from Hong Kong. So what are we seeing in terms of this upper hand now?
Yeah, well, we know that BYD has already overtaken Tesla when it comes to total number of vehicles sold since second quarter of 2022. But this is the first time they're beating in revenue as well. So third quarter revenue had risen by 24% to 201 billion yuan. That slightly missed estimates of 204 billion yuan, but exceeded Tesla's $25 billion in sales in the same period. Net income as well increased 11% to a record 11.6 billion yuan, beating estimates. But if you look at profits, though, that is still overshadowed by Tesla's for the same period. Gross margin was up, was 21.9%, again beating estimates, and overall vehicle deliveries 1.1 million cars. That's also a record as well. So overall, a very solid quarter, and that is really driven by the resurgence in sales in China, because we have the government rolling out these consumption stimulus, encouraging people to upgrade their cars, move away from traditional cars to the hybrids. And this is where BYD really had a leg up because of its lineup of hybrid vehicles. And of course, Tesla only has the full electric vehicles available. Overall, fourth quarter sales outlook is looking even stronger, because the end of the year is always a time for people to purchase cars. And you also have central government agencies being ordered to buy up electric vehicles to support the sector, and that could shield it from some of the impact from these resistance from other countries for the companies to expand overseas.
Yeah, Mimi, let's talk a little bit about that, because those are some of the challenges that Chinese EV makers face, right? And we're now seeing the EU is going to be trying to send envoys to negotiate on tariffs.
That's right. So those tariffs, the regulations had been published yesterday on the EU's website. And now we're hearing that EU officials have accepted the Chinese invitation to travel to Beijing for further negotiations. And that suggests that there is some momentum behind the new rounds of negotiation. Both sides are looking for an alternative way, aside from the tariff, a sort of complex undertaking, a price and volume control. But so far, no breakthrough yet after 8 rounds of talk. And we're hearing from sources that both sides are looking to simplify that mechanism and avoid the sort of cross compensation where you have minimum import prices for certain types of cars, but then that's being offset by sales in other goods such as hybrid vehicles. And another stumbling block is that the EU has been negotiating one-on-one with certain car makers, and that is something Beijing is very against. They want a sort of umbrella agreement that is represented by a Chinese trade body. So we'll have to see how the negotiations play out in the coming months.
Bloomberg's China correspondent Min Minder here. Other headlines that we're following out of China, and the country's biggest state-owned banks delivered profit gains in the third quarter, defying a slowdown in the Chinese economy. ICBC and 4 of its smaller rivals posted increases. Lenders also reported a surge in so-called other operating income without elaborating. China's banking industry has been battling record low margins and rising bad debt as it works to backstop a sluggish economy. Shares of AstraZeneca slipped in London after the firm said its China president, Leon Wang, was under investigation by Chinese authorities. The drug maker says Wang is cooperating and, if requested, AstraZeneca would work with the investigation. Earlier this year, Chinese police detained several current and former employees for questioning over potential illegal activities. Bloomberg has learned that the European Union is preparing to launch an investigation into Chinese e-commerce platform Temu. That's over concerns that it's failing to curb the sale of illegal products online. EU regulators have carried out similar inquiries into Meta, AliExpress, TikTok and X. US-listed shares of Temu's owner, PDD, fell on the news. More ahead on the Asia trade. This is Bloomberg.
We have an alert on the Bloomberg on North Korea's suspected long-range ballistic missile. Prime Minister Shigeru Ishiba now saying that he will convene a National Security Council meeting. There are no reports so far of any damage from the North Korea missile. We are hearing from the Japan Coast Guard as well that the missile is likely to fall at 8:36 a.m. Japan time. It's supposed to fall 300 kilometers west of Okushiri in Hokkaido. So we continue to follow the developments around North Korea's suspected ballistic missile, Haidi.
Well, UBS share Shery fell in Switzerland even after the bank posted a third quarter profit beat. CEO CEO Ermotti is warning of looming risks for the remainder of the year due to events such as the US election.
If I look at the macro and geopolitical front, the US election for sure won't be an uneventful topic. So I think that no matter who wins and how they win and how things play out, so you're going to see changes and movements in markets. So it will remain to be seen how investors will react to that.
The U.S. election is exactly 7 days from now. So how do you prepare for that?
Well, we are prepared to basically stay close to clients, advise them, and on how to eventually position themselves and take advantage of any movements. But also, from a bank standpoint of view, of course, we are always prepared for major events.
But so, what do you exactly worry about? Is it market volatility, uncertainty, or is it also the impact, for example, of a Trump presidency on tariffs and on bank regulation?
No, that one is not really the issue. I think that right now the markets are pricing rather a Trump victory, and think that if this is confirmed, it remains to be seen. Is a classical sell on news event, or how he wins will be also determining. Is he in control of the Congress? If Kamala Harris wins, of course, some of the trades that are ongoing for Trump will probably have to be reconsidered, and therefore they're going to create rotations in the market and other movements. So I think, as I mentioned, it's not going to be an uneventful topic.
Does that mean, extra inflation? And how do you think it impacts, is there going to be a standstill of M&A, again, depending on what happens and who wins and how they win?
No, inflation, I don't know. Inflation is probably going to be more, a consequence of the ability of central banks to really do the last touch and really bring core inflation below their targets. And the risk there is probably more coming from the geopolitical front. Any dislocation in respect of supply chains, energy access, energy prices can bring back inflation to a level that may slow down the pace of rate cuts. But on the rest, I think that we are well prepared for any scenario.
Sergio, on share buybacks, you have a pretty hefty, number that you want to give back. Is there anything that puts that at risk?
Well, it's fairly modest compared to what UBS and other banks are doing nowadays. Is somehow reflecting the fact that we are still midway into the integration. We need to still absorb a lot of cost to restructure and Credit Suisse. So I think that despite the fact that we have very strong results, we still are halfway in the journey to restore the profitability levels that are allowing us to have the similar return on capital we had before the acquisition.
But so again, there are many questions about extra capital requirements also by the Swiss authorities. How does that impact actually your thinking on share buybacks and dividends?
It's a consideration, so we always have to think about. But in the short term, this is not going to affect our policy. We are executing our 2024 plans, and we believe that also for 2025, this will not be a major issue, and then of course we have to consider all the elements, but our aim is to continue to our aim is to deliver same levels of capital returns UBS had before the acquisition by the end of 2026.
How are your conversations going with Swiss authorities on these capital requirements, and where do you think they'll land? There's a range between 10 billion and 20 billion.
The conversation are still at technical levels, so I think that it's premature to, the rest is going to be, once we finish technical level discussions, there's going to be then a consultation process. We are not in control of timing, so in that sense, it's way too early to speculate or on this matter. We do believe that we have a very strong capital position, and we do hope for a proportionate outcome.
UBS CEO Sergio Ermotti speaking with Bloomberg's Francine Lacroix there in Zurich. And take a look at how currencies are trading early in the Asian session right now. We continue to see the Japanese yen trading above that 153 level per dollar for a fourth consecutive session. We're headed towards the worst month since 2016. We are not expecting any changes when it comes to the rate from the BOJ today. We're following the Aussie, not really doing much, but it's really to do with what's happening with the US dollar, right? It fell overnight, lagging G10 peers, but it's still been up about 3% this month. We're looking at the pound because it also lagged G10 peers, and all of this to do with UK Chancellor of the Exchequer, Rachel Reeves, unveiling tax rises, but also increased borrowing in order to meet Labour's pledge to rebuild the country. Traders are digesting the long-term ramifications of taking on so much debt. Garfield Reynolds leads our Markets Live Asia coverage and joins us now. And Garfield, was really a roller coaster ride for gilts as well.
Yeah, absolutely, and it's one of those things where even where there's volatility, even going into something, and even when you think that the market has gamed out what's going to happen, what Reeves came out with on the basic parameters was pretty close to what we did a survey of traders, and the extra issuance was about 4 billion more than the median expectation, 297 billion instead of 293 billion. And initially, while the budget was being delivered, the market was fairly okay. But then the key was when the OBR came out, the Office of Budget Review came out and said this is going to mean higher rates, slower BOE rate reductions, and also slower growth than had been the expectation before. That's when the bond market went, Yeah, maybe we're being a little bit complacent in saying that what Reeves was planning and mostly what she delivered is going to be a smooth ride. And it's a reminder of just generally with global bond markets, there's a lot of concern about the potential for extra issuance from governments. That part of that is because the economies are slowing, so you need more bonds. You've also got the lingering distortionary effects from what went on into and out of the pandemic. So that makes it's one of those things that makes bonds in general, and especially gilts, given what's happened over the last couple of years, not exactly always the best havens when investors are looking for safety.
Gav, what are you watching out for when it comes to looking ahead to the BOE then? Because there's a particular focus on whether the outlooks will be cohesive on both sides.
Yeah, that's what are the key questions? And I think bond and currency investors have on occasions had some difficulties reading just exactly where the BOE is going to go, whether it is going to, and the BOE itself has signaled a lot of anxiousness about, we think inflation's coming down the way we want it to, and we're also thinking that growth is slowing, which is also kind of what we want in order to be sure that inflation is slowing, so therefore we can carry out the sort of rate cuts that they want. And what they want is gradual rate cuts to ease the economy down without, to cushion the economy as it slows down, but not to have to, carry out big rate cuts. They've been on the verge of thinking that they do need to go large. That's going to be one of the questions coming out of this is, does this cool down the BOE's ardor for being willing, for a willingness to cut rates by 50 basis points if the economy seems to be signaling that it's wanted? Because if they are going to be reluctant on that front, while bond investors might welcome it, currency investors might not, because they might be worried that the BOE is going to end up being risking a serious slowdown in the UK economy, because that fiscal side of things is re-emphasising their concerns that inflation could remain stickier than they want.
And really, that's the key point in the U.S. as well, right? I mean, to your point about the global picture, we have already heard from the IMF warnings about sovereign debt really gaining ground after the pandemic, both in the U.S. and in China. We have two very consequential weeks for the treasuries market as well. Heavy supply of notes, bonds, and a potential election that could see more spending, that could see more inflation.
Yeah, well, I mean, one of the concerns is not so much that the US election is going to lead to more spending. It's that once the US election is out of the way, bond investors will focus on the more spending that's coming, whether whatever the result is and whenever the result becomes known. Both sides of politics are talking about, very strongly about the sort of thing that's going to increase issuance, that's going to increase deficits, and even when you have each side of politics also nodding towards the idea that they will cut spending or boost revenue, but those spending cuts and revenue boosts they're talking about, those have to get through Congress mostly, and that's going to be very hard to manage. Even if either side gets an alleged majority, it's likely to be a thin majority. And for example, if the Democrats were to get a clean sweep, do we really think that even a Democratic Congress is going to put through the tax increases that Harris has flagged? That seems unlikely. So given all of that, US debt is going to go on growing. Those bond vigilantes are going to remain a concern. And in fact, they're going to be a concern that becomes more actual once we get the election out of the way and we can price in more clearly, okay, there's going to be this much more issuance rather than this much more or this much more, which was what we were looking at before. So that's one of the big risks here going forward. That's why we've had a lot of people saying that Treasury yields can keep going higher, even though it seems contradictory. The Fed is cutting rates, and yet bond yields have been rising. That already tells you just how serious the concern is that there's too much debt out there.
Yeah, I mean, we already saw the gyrations around Liz Truss's tenure in 2022, right? Garfield Reynolds, good to have you with us. He leads our Markets Live Asia coverage, and you can follow more on this story and all the day's trading on our Markets Live blog. That's on the Bloomberg at MLIV Go. You can get a market rundown in one click. There's also commentary and analysis from Bloomberg's expert editor, so you can find out what's affecting your investments right now. And these are the latest from the corporate front. Eli Lilly shares tumbled after it cut the top of its full-year sales guidance by $600 million following lackluster sales of its weight loss and diabetes drugs. Quarterly revenue for the Zepbound Mounjaro franchise missed estimates for the first time, raising questions about demand for the shots. The drug maker blames the shortfall on inventory issues. Trafigura is preparing to take a $1.1 billion hit after discovering what it suspects was fraud involving employees. Trafigura says staff in the Mongolian oil business manipulated data and documents and deliberately concealed overdue debts. The announcement confirms earlier reports by Bloomberg and may force the company to restate prior earnings. BHP has been forced to walk back comments about having moved on from its failed Anglo-American bid to avoid running afoul of UK takeover rules. Chairman Ken McKenzie made the comments at the company's shareholder meeting in Australia, sending Anglo shares tumbling. BHP says his comments were not intended as an official statement.
We do have breaking Samsung numbers crossing the Bloomberg at the moment, Shery. We're seeing that third quarter sales of 79.10 trillion won there. Third quarter net of 9.78 trillion won. The estimate was for 9.14 trillion won. The operating profit coming in at 9.18 trillion won there. But that net number, 9.78 trillion won, slightly higher than expectations of 9.14 trillion won. Let's bring in, for a little bit of analysis, Belle, who's taking a look at. We're just getting that breakdown because, of course, the slowdown in the smartphone market is one key weakness. We're seeing that number when it comes to the mobile networks, operating profit at 2.82 trillion won there, also a little bit better than expectations. Chip sales a little bit shy of expectations.
Yeah, and actually when you take a look at chip operating profit, it is really undershooting expectations here. So it's come in at 3.86 trillion won. The estimate had been for 6.66 trillion won. That is a major miss that Samsung has made on that division in particular, and it just tells you that competition around HBM and how Samsung is really falling short in this space. Because actually, when you take a look at the mobile networks operating profit, that's pretty much in line with expectations. It's actually a little bit better. So maybe it's those other parts of Samsung's business that are actually helping to offset that weakness in the AI chip division in particular. This is a really big concern for the company, and we've been talking about that because not only is it falling behind SK Hynix, it's also behind the likes of Micron, for instance. It's also trying to play catch up in this space. So it's clearly a major risk for the company, and we'll definitely be wanting to get more details on it in the call later.
Yeah, so tell us a little bit about those potential bright spots for Samsung left then.
Well, it does really relate to where these chips are being produced, because actually this is where perhaps Samsung has a bit of an edge over SK Hynix in light of the US election in particular and who's going to be next to return to the White House, because Samsung is free of liabilities that are tied to DRAM in China because it doesn't actually make them in the country. And DRAM is more important than NAND flash memory in this space because of that technological sophistication and because of the application to AI in particular. So as we've been saying on the blog this morning, the T-Live blog, but how a possible Trump presidency could impact Samsung's global production is going to be one of the key questions going forward, really irrespective of who enters the White House. Of course, Trump has promised to be hawkish, but President Harris as well is very clear that she really wants the US to have a technological edge going into the 21st century here. It's also notable because in terms of the share price reaction that we've seen just from June of this year, the stock has slumped really significantly, and investors, foreign investors in particular, have been pulling out of it because they're concerned that the company is losing its technological edge.
Tech reporter Anne Boudreau is there with us. We're going to have more analysis when it comes to these Samsung numbers, the miss when it comes to the chips numbers in particular. Some more analysis coming up next. This is Bloomberg.
And we're recapping some breaking news out of Samsung. Of course, we got the divisional breakdown, and we're now getting their third quarter net coming in at 9.78 trillion won, which is higher than estimates at 9.1 trillion won. But when it comes to the chip section, that's a big miss. Sales of chips in the third quarter also missing 29.27 trillion won, but it's the operating profit coming in at 3.86 trillion won. The estimate was for more than 6 trillion won in chip operating profit. Samsung now saying that they will be leveraging mass production on 2nm process in foundry, that their chip division will be focusing on HBM, server SSD next year, that their mobile division will also be focusing on AI features in 2025, as the company, as we know, has been lagging behind some rivals like SK hynix when it comes to high-margin HBM chips. Again, their chip operating profit really lagging those estimates. And really, when it comes to the semiconductor sector, of course, we've been watching it very closely, especially around geopolitical tensions. Now, the U.S. election campaign is likely to impact Asia, especially through the semiconductors business. Under the Biden administration, Taiwan has become a crucial part of the global chip supply chain and a key contributor to the world's AI future. Bloomberg's Annabelle Drewlers takes a closer look at the high stakes for the island's tech industries as China tries to level the playing field.
I will make sure that America, not China, wins the competition for the 21st century.
Two candidates with two different approaches toward Beijing.
To me, the most beautiful word in the dictionary is tariff.
Caught in the middle is Taiwan, which relies on the US for security guarantees, but has deep economic and cultural ties to mainland China. There are signs of a cross-strait decoupling, including fewer people self-identifying as Chinese. Yet Donald Trump's criticisms are just one reason Taipei's trust in the US is also at risk.
Skepticism towards Washington has been increasing in the last few years. We need to chart our own way and not completely depend on Washington and not completely economically depend on Beijing is hugely important.
Who's next in the White House matters to key chip companies on the island, facing uncertainty over industry support in the States, while Beijing pushes to level the tech playing field.
The entire ecosystem in semiconductor has to face actually stronger competition from China. At the same time, with the United States, it's not really clear how much of the subsidies will be coming to Taiwanese manufacturers. So net for Taiwan, it's a loss.
Pressure on Taiwanese chip firms to offshore at least some production is unlikely to abate, even if UBS is among those who see essential operations staying put.
The core and the benefit of this ecosystem, R&D, technology development cost is quite competitive here. So I think for Taiwan, they're going to try to keep it controlled, keep a core base here, and diversify what they need to.
Retaining crucial semi-production on the island carries a risk, as worries swirl that tensions between Beijing and Taipei could spiral into military conflict.
A conflict of some sort is very, very likely. If you think about the need to choose between the U.S. and China, I think it's a very difficult one.
Still, Taiwan's government and big business alike say they're ready to work with either new U.S. leader.
I don't worry about whether the Republic or the Democratic parties.
We already experienced many of the presidential elections, and then we mitigate risk and maximize opportunities.
Annabelle Drewlers, Bloomberg News.
Let's bring in Chris Miller, who's a professor of international history at Tufts University, also the author of Chip War. Chris, let me start off with a reaction to Samsung. Clearly, this firm continues to struggle with the chip business.
Well, I think that's right. Samsung has been struggling on the memory side, having fallen behind its rival SK hynix when it comes to producing the HBM memory chips that are critical in AI, and its foundry business, its logic business, has also struggled to win market share against TSMC, its primary rival based in Taiwan.
How much does the broader geopolitical risk element play in here?
Well, I think it hasn't been the reason for Samsung's challenges, but it does create issues for any company that's trying to straddle the dividing line, selling both to the Chinese market as well as to the U.S. market. Samsung, of course, has most of its manufacturing facilities in Korea, but substantial facilities in China and in the United States. And so it faces potential regulatory challenges from both directions. And I think Samsung's not alone among Korean firms in having to strike a pretty complex balance between Beijing and Washington.
And that commitment from Washington is really up in the air, right? Who gets impacted the most, and what are you looking out for in terms of what that result next week is going to be?
Well, I think the election next week certainly brings potential differences in tariff policy. Trump has said he would impose broad, sweeping tariffs. Harris has been much less vocal about that. But when it comes to semiconductors specifically, I actually think there's a lot of bipartisan agreement in Washington. The CHIPS Act, which companies like Samsung and TSMC have received funds from, that was supported with Democratic and Republican votes in Congress. I don't think it's very likely that whoever the next president is will dramatically change that program. And similarly, the effort to contain the transfer of technology going to China, that also has bipartisan support, and that's also likely to persist regardless of who wins the presidential election next week.
The potential for AI in terms of being the game changer, how much does that rely on what happens with Taiwan?
Well, it's critically important. TSMC recently stated that they produced 99% of the GPU chips that are critical for both training and deploying AI systems. Many of the key AI servers are assembled in Taiwan using components that are produced in Taiwan. There's no country in the world that I think has benefited more from AI than Taiwan, and there's no country that's more important in actually the manufacturing of the infrastructure that makes AI possible. I think Taiwan is becoming an AI island. In a really extraordinary fashion. You see this certainly in TSMC's valuation, but the entire Taiwanese
Chris Miller,
stock market.
Professor at Tufts University there. The market opens are next.
This is the Asia Trade. We're counting down to Asia's major market opens. As we focus on the tech sector, of course, we had tech giants like Meta and Microsoft disappointing and some big moves in late hours. But Haidi, is really about Samsung earnings as well. I mean, the profit is rising, but at the same time, their chip division not doing very well.
Yeah, clearly still struggling when it comes to the chip business, right? We're wanting to see a lot more details in terms of how that's broken down. But of course, as you say it is that focus on tech, the focus on earnings, particularly when it comes to the bulk of earnings in China. But of course, it is also that Bank of Japan decision as well, which takes place against this landscape of political uncertainty.
I mean, we're going to forget that it's BOJ Day, given that we have so many different types of news today, including in the tech sector, also economic data, and also not really much expected from the Bank of Japan decision today, expected to keep rates unchanged. We are seeing the Nikkei right now under pressure. After 3 sessions of gains already, the Japanese yen strengthening a little bit, but still past that 153 level for a 4th consecutive session. As I said, not a lot expected from the BOJ, but the fact that we got those retail sales numbers for the month of September, rising only 0.5% year on year and coming in below expectations, decelerating from the previous month, that might give some pause to policymakers as we're seeing consumer spending stalling. The industrial output numbers, although they're doing pretty well, rising 1.4% month on month, and that's really beating expectations, despite the fact that we are coming off from a typhoon and a mega quake alert that might have distorted some of those numbers in the previous month. Not to mention, on top of all of this, we also have geopolitical tensions because we're hearing from the Prime Minister that they are convening a National Security Council meeting. Of course, we heard that North Korea appears to have fired the long-range ballistic missile. Take a look at how South Korea is coming online. We're watching those defense stocks very closely. But at the same time, we had industrial production numbers contracting month on month, year on year for the month of September in South Korea. Perhaps a little bit of a signal of what's happening in the tech sector, right? As I said, Samsung earnings, profit rose, but at the same time, chip sales disappointed. Operating profit in the chip division coming in at 3.9 trillion won. The estimate was for more than 6 trillion won. So you're seeing Samsung Electronics right now losing about 0.7%, Heidi.
Yeah, let's get some more on those numbers out of Samsung with our tech reporter, Annabelle Jewellers, to get some more context. So, quarterly profit beats, major concerns about the chip division and what's going on there in terms of its inability to catch up.
Yeah, exactly, and that's really what we want to get more details around. We know that Samsung has been falling behind SK Hynix in terms of HBM, high bandwidth memory chips, but broadly, when you take a look at the earnings we've had this time around, there's been that real theme developing as well, that certain sectors of the semiconductor industry are faring better than others. So legacy chips that are tied to things like consumer electronics, to automotives, they're still lagging and they're still really coming out of that slump in semiconductor inventory and trying to clear the glut. At the same time, there's still that growth and that optimism around AI in particular, and that's the trend that perhaps could have come through, but we really want to get more details out of that in the earnings call, because Samsung itself is saying that actually, when it comes to HBM, they're still seeing significant revenue growth. So they're trying to share that note of optimism perhaps, but really it's that question. We want to get more details. How are they going in HBM in particular? We haven't got any details, for instance, of whether they've been able to win HBM certification from NVIDIA. That would be a really key area that we want to get more details on. So again, a lot of focus on that earnings call coming up.
Yeah, we're hearing a lot from Samsung right now. Their chip capex also coming in at 47.9 trillion won. What will you be focusing on when it comes to the briefing?
Well, as we said, focus on HBM and more details on that. And then there's also other parts as well, that effort, for instance, to try and build out the foundry business. Because what's interesting is that Samsung has said that it expects overall contract chip making to expand by double digits in the coming 12 months. But it didn't actually give a forecast for its own foundry business. Samsung is really trying to go head-to-head with TSMC in this space. They're also saying that they're planning to launch 2-nanometer processing technology in 2025. That's also in line with TSMC that's expected to launch that toward the end of next year. So it's really about trying to win new clients in this space. We want to know exactly how they're going with that cutting-edge technology, but a lot of focus on these numbers in particular, given the concern from investors that Samsung could be losing its technological competitiveness to the likes of SK Hynix, of course, but there's others in the space. Micron, for instance, in the US, that's also trying to develop a lead in HBM in particular.
Our tech reporter Annabelle Jewellers is there with the latest on Samsung. Let's bring in Daniel Yu, who's the head of global asset allocation at Yuanta Securities. Daniel, great to have you with us. And, obviously the global AI expansion theme is still a key one for you. But as Belle mentioned, it's getting quite clear who the winners and losers, those that are perhaps struggling to assert dominance, are. How do you view the opportunities, particularly when it comes to the Asian names?
If you look at the global structure of this AI cycle, we can see that it is clearly the winners are the U.S. companies. As you know, the AI cycle, the infrastructure's build-up is mostly based on the data centers. And if you look at the level of data center capacities, I think that globally, probably more than 80% is all built in U.S. So I think we've got to think about that terms. So if you look at Samsung Electronics, obviously having an association with NVIDIA and trying to ship out the chips, it's not really happening yet. As you know, the SK Hynix is probably having a market share of more than 80% of that business. Now, as you mentioned earlier, we look at the Micron, and Micron's competitiveness seems to be rising. So all that in terms of infrastructure-wise, it's all related to the data center. I think more importantly, though, however, we got to look at the software segment. In the past, when there was a internet cycle, you had a significant amount of the capacity increase in the infrastructure for the 5 years, and then software expansion was happening over the period of 15 years. But it seems like right now, the AI cycle-wise, the hardware as well as softwares are all start to kick in. If you look at the overall increase in the investment on the software side, U.S. is increasing by more than 11% this year. Clearly, the two-digit growth numbers are happening. So I think the speed of the penetration regarding the AI is going to be extremely high. But it seems that the speed of that is all focused in the U.S. rather than any other country. So in terms of the Asian names, the relationship with the U.S. is the most important thing. So that's why if you look at the TSMC, they're doing great. SK Hynix, they're doing great. But Samsung Electronics is struggling. Some other companies are also struggling.
it's interesting you use words like essential, like paramount when it comes to these holdings, the big AI-related holdings in the US, right? For Mag 7 and adjacent stocks, does that mean that view is sort of Fed policy agnostic? Is it US election agnostic too?
Yeah, I think that, first of all, let's look at the interest rate front. If you think that the AI is going to accelerate very quickly, that reduces the risk of inflationary pressure because the productivity goes up significantly. The inflation pressure comes from the demand side, where the investment as well as the demand on the consumer side accelerates due to the high salary increase. That's the inflation pressure. But if the GDP is growing on the basis of productivity improvement, the level of the inflation pressure goes down. That's what we saw in the internet cycle of early 90s to the late 90s. I think that if AI cycle continues to expand in US, we think that the pressure on the inflation will be reduced, and therefore Fed will be able to lower the interest rate as planned. So far they lowered by about 50 basis points. They are expected to lower by another 50 basis points by end of the year. Next year, another 50 to 75 basis points. I think that that's a very reasonable number to be expected. On top of that, I think that what we more worry about is that who becomes the president changes the perspective of the investment cycle. If the Trump gets into power, then we do expect he will raise the tariff by 100% and also lower the corporate tax rate by 6 percentage points. That changed the perspective of global market, and it really benefits the U.S. companies. So I think that will probably accelerate the process of inflation pressure, and therefore the lowering interest rate might be taking a bit slower pace or may not even happen. So we need to look at that and see what happens to, Go ahead, please. What about it?
And Daniel, what about the currency transmission? Because if we do have a stronger U.S. dollar because of those calculations that you talk about, that will also mean potentially a weaker yen, and we know the Japanese companies, for example, have really benefited from that.
Right. I think that that's basically the given, meaning that I think if you look at Korean won as well as Japanese yen, we do think that currently we have a lower interest rate environment. So therefore, we do expect the currencies to probably gradually depreciate rather than appreciate. So I think in terms of the price competitiveness, Japanese companies as well as Korean companies would probably able to increase that. However, though, if you look at the demand in regards to the AI cycle, it's not the price only. It's the quality of things and how competitive are you in terms of the technology basis. So if the Samsung cannot be able to capture that market share because of the heating problem, that is an issue, right? So I think that we got to look at how things are play out. But I think as interest rate will remain fairly reasonably high in U.S. versus the Asian countries, we do think that the currency would probably gradually depreciate for the Korean won as well as Japanese yen continuously in the future.
What are the implications of that for central banks? We do have the Bank of Japan decision today, and what will be the transmission when it comes to the stock markets?
Well, I think that it would be tougher for them to lower interest rate in any case, if Japan or Korea. But whereas maybe raising interest rate, obviously Korea is at 2.75%, so they're not going to raise it, but probably will be tougher to lower interest rate. Whereas also if you look at Japan, interest rate still remains to be below 0.5. So I think that they will gradually raise interest rate, but I don't think that they can raise it further to beyond 1%. So that won't change too much in terms of the currency perspective. So in terms of Japanese yen, it's already depreciated from 140 to 153 or so. I think that will probably remain somewhere in a bound trading, somewhere between 145 to 155.
Now, watching Asian markets over the years, we have realized that any North Korea provocation, whether it's ballistic missiles, they don't necessarily tend to have a lasting impact. Not even defense stocks move these days. But in the broader geopolitical context, for example, what should we be on the watch out for in the coming months?
Well, clearly, if you remember, if the Trump comes into power, obviously he will start to talk again with Kim Jong-il of North Korea, because they had that kind of peace treaty kind of thing. He met twice, right, during his terms. I think things can happen in that front. Also, if you look at the geopolitical issues in terms of Israel, if you look at the Trump perspective, is that he will probably end the war. That's what he's saying. But clearly, we are seeing that in terms of the oil price implication, we're not seeing the prices going up. Rather, it's actually settling down. So geopolitical risk, which affects the oil prices and inflation pressure, seems to be kind of dwindling down. So we think that right now the biggest tension is the geopolitical issues, but it's at a level of about 33% terror risk. We think that percentage is expected to go down as the presidential election finishes and going to the future. So I think that that's not going to be a major issue per se, rather than an issue, but I think it will probably gradually come down to affect positively on the equity market.
Daniel Yu, always good to have you with us, head of global asset allocation at Yuanta Securities. And still ahead on the Asia trade, more on the BOJ's decision as investors await any guidance on the timing of the next rate hike. UBS SuMi Trust joins us with their outlook. This is Bloomberg.
It's clear that there are a lot of new opportunities to use new AI advances to accelerate our core business that should have strong ROI over the next few years. So I think we should invest more there. And second, our AI investments continue to require serious infrastructure, and I expect to continue investing significantly there too.
All up, our AI business is on track to surpass an annual revenue run rate of $10 billion next quarter, which will make it the fastest business in our history to reach this milestone.
The CEOs of Meta and Microsoft speaking about AI on their post-earnings call. Take a look at late trading for these two stocks because we saw the downside pressure for both Meta and Microsoft. Meta coming out with a narrow beat. They have their AI spending continuing, so they've now warned investors the losses from its division focused on AI and augmented reality could continue to widen, quote, meaningfully this year, and that's put pressure on their core advertising business to fund the effort as well. When it comes to Microsoft, we had shares also tumbling at 1 point more than 4% in late trade. Microsoft gave a disappointing second quarter forecast, telling investors that the cloud revenue growth will actually slow and margins will shrink and expenses will rise, Haidi. So we'll continue to watch the tech sector broadly in the Asian trading session, as well as we got those Samsung earnings as well.
And Shery, we're watching BYD, the Chinese electric vehicle maker, of course, notching up another win over Tesla, reporting quarterly revenue that beat Elon Musk's car maker for the first time since the pair have gone head-to-head in global sales. Our Chatter correspondent Min Lo joins us now for a look at these numbers and this battle of EV giants. We are seeing one winner sort of clearly emerging.
Yeah, so it is really a big milestone for BYD because they have beaten Tesla when it comes to the total number of vehicles sold since 2022, but it took them a while to finally get here to beat Tesla when it comes to revenue. It was up 24% in the third quarter, slightly below estimates. It came in at 201 billion yuan. Estimates was 204 billion yuan, but still it's better than the revenue for Tesla in the same quarter. Net income, though, that came in better than estimates, but still far below Tesla's performance when it comes to profits. Net income increased 11.5% to a record 11.6 billion yuan. And in terms of number of vehicles sold, that's again a record of 1.1 million vehicles, again better than estimates. So overall, a very solid quarter here. That's boosted by the stimulus measures from the Chinese government, encouraging people to change their cars from traditional cars to the EVs and the hybrids. And again, if you look at the chart we have, that's where BYD really has a leg up, because the bulk of their sales is really coming from the hybrid vehicles that, of course, is not in the offering from Tesla. Fourth quarter sales looking to be very strong because the end of the year is often peak purchasing season. And we also got a new directive from the Chinese government calling on central government agencies to buy EVs to support that sector. And so Citibank has said they are predicting that Tesla can hit 500,000 vehicle sales per month by November, and that puts them on track for their annual growth sales target for this year.
Despite all of this, broadly, though, we continue to see these challenges for Chinese-made EVs, right? We're now hearing that the European Union will be sending some envoys to China in order to discuss tariffs.
Yeah, this really has been the big sticking point between the two regions, right? I was just looking at the Chinese state media. There's been so many articles from the Chinese media just talking about their opposition to these tariffs. The good news is that after 8 rounds of talk, finally the EU officials are once again going to travel to Beijing, accepting the Chinese invitation to do that. So that suggests there is still more momentum behind negotiations, both sides looking intent on avoiding a broader trade war, and they're looking to implement a sort of complex price and volume control here, though we're hearing from sources that officials are looking to simplify that mechanism. It's still going to be quite complicated, and they want to avoid a sort of cross-compensation where you could have price floors for certain types of imports, and that could be offset by increase in sales for other types of hybrids, for example. So we'll have to see how this new round of negotiation goes forward.
Bloomberg's China correspondent Min Min Lo there. Some of the other headlines that we're following out of China, and the country's biggest state-owned banks delivered profit gains in the third quarter, defying a slowdown in the Chinese economy. ICBC and 4 of its smaller rivals posted increases. Lenders also reported a surge in so-called other operating income without elaborating. China's banking industry has been battling record low margins and rising bad debt as it works to backstop a sluggish economy. Shares of AstraZeneca slipped in London after the firm said that its China President Liang Wang was under investigation by Chinese authorities. The drug maker says Wang is cooperating and, if requested, AstraZeneca will also work with the investigation. Earlier this year, Chinese police detained several current and former employees for questioning over potential illegal activities. Bloomberg has learned that the European Union is preparing to launch an investigation into the Chinese e-commerce platform Temu. That's over concerns that it's failing to curb the sale of illegal products online. EU regulators have carried out similar inquiries into Meta, AliExpress, TikTok and X. The US-listed shares of Temu's owner, PDD, fell on the news. More ahead on the Asia trade. This is Bloomberg. Let's take a look at how futures in Europe are opening up this Thursday, and we are seeing that picture of broad weakness, as you can see, when it comes to Stoxx 50 futures, German DAX futures, all trading to the downside, about 0.25%. We did see European stocks in the cash session yesterday falling by the most in over a month. Some of that broader weakness when it comes to the build-up of geopolitical as well as economic risk, as well as some disappointing earnings ranging from banks, of course, UBS seeing that weakness there, as well as retailers like Moncler watching their share when it comes to potential more gains when it comes to these budget-related sectors trading in the UK.
Yeah, we're really watching broad political risk, right? Especially around the U.S. election campaign as well, and its likely impact on Asia. Under the Biden administration, Taiwan has become a crucial part of the global chip supply chain and the key contributor to the world's AI future. Bloomberg's Annabelle Drewlers takes a look at the high stakes for the island's tech industries as China tries to level the playing field.
I will make sure that America, not China, wins the competition for the 21st century.
Two candidates with two different approaches toward Beijing.
To me, the most beautiful word in the dictionary is tariff.
Caught in the middle is Taiwan, which relies on the US for security guarantees, but has deep economic and cultural ties to mainland China. There are signs of a cross-strait decoupling, including fewer people self-identifying as Chinese. Yet Donald Trump's criticisms are just one reason Taipei's trust in the US is also at risk.
Skepticism towards Washington has been increasing in the last few years. We need to chart our own way and not completely depend on Washington and not completely economically depend on Beijing is hugely important.
Who's next in the White House matters to key chip companies on the island, facing uncertainty over industry support in the States, while Beijing pushes to level the tech playing field.
The entire ecosystem in semiconductor has to face actually stronger competition from China. At the same time, with the United States, it's not really clear how much of the subsidies will be coming to Taiwanese manufacturers. So net for Taiwan, it's a loss.
Pressure on Taiwanese chip firms to offshore at least some production is unlikely to abate, even if UBS is among those who see essential operations staying put.
The core and the benefit of this ecosystem, R&D, technology development cost is quite competitive here. So I think for Taiwan, they're going to try to keep it controlled, keep a core base here, and diversify what they need to.
Retaining crucial semi-production on the island carries a risk, as worries swirl that tensions between Beijing and Taipei could spiral into military conflict.
A conflict of some sort is very, very likely. If you think about the need to choose between the US and China, I think it's a very difficult one.
Still, Taiwan's government and big business alike say they're ready to work with either new US leader.
I don't worry about whether the Republic or the Democratic parties.
We already experienced many of the presidential elections, and then we mitigate risk and maximize opportunities.
Annabelle Drulers, Bloomberg News.
Now, Taiwan is suspending trading on its $2.5 trillion stock exchange on Thursday as a powerful storm makes its way towards the island. Super Typhoon Kongray has intensified as it skirts the Philippines and tracks toward Taiwan, where it's expected to make landfall today afternoon. Taipei is also shutting offices and school. This is Bloomberg. We are watching retail sales numbers. Just crossing the Bloomberg here, we're seeing retail sales numbers for Australia. That month-on-month September reading coming in at just 0.1%, shy of expectations of 0.3%, and also really falling from that 0.7%. Stripping out inflation quarter on quarter, it is a gain of 0.5% in line with expectations. But of course, this continues to build out reasons for perhaps why the RBA might be thinking about where their policy stance goes from here. We did have the inflation numbers, whilst an undershoot on consensus still pretty elevated in yesterday's reading. Let's get some more context on the numbers. Bloomberg's Paul Allen joins us in Sydney. So are we kind of seeing a clear trajectory here when it comes to spending? Because we know the RBA has prioritised the importance of household confidence too.
Yeah, the bad news is that no. I mean, this was obviously an undershoot for the month of September after a surprise in August. The numbers were very, very good. And, you know, you can see that it's a beautiful day behind me here in Sydney, and a big factor to do with that was the weather. It's been unseasonably warm, so people were going out, spending on things that, or bringing forward spending on things such as summer clothing, outdoor equipment, outdoor entertainment, that kind of thing. But as we see from this month's numbers, the effect of that seems to have petered out. Retail sales, as you say, coming in at 0.1%, and I'm just waiting to see if that September number has been revised, so keeping an eye on that as well. But look, inflation is high still, but it's coming down. The RBA's been keeping rates high to bring inflation under control, and that's really been crushing discretionary spending. The National Retail Association has been saying this has been a tough couple of years. This is not a new phenomenon.
Are there any signs of sort of the cost of living pressures starting to ease in Australia?
Well, the data will say yes. I mean, we did have those CPI numbers yesterday that were very encouraging. Headline CPI 2.8% on year, and that's back inside the RBA's target range. But The anecdotes will say otherwise, and it was very timely just this morning. One of the local media outlets here, the Sydney Morning Herald, had a story about young people who are working 3 jobs. They're buying food in co-ops instead of supermarkets, and we still have a situation where rents are absolutely sky high due to constrained housing supply. So we might see those headline numbers easing, but it doesn't mean people have got more money for discretionary spending. It's likely we're going to see retail sales continue to get squeezed. But the good news is longer term things do start to look more promising. The worst is obviously over now in terms of the inflation fight. The RBA's not moved since, it's been 51 weeks now. The next move,
right,
it is likely to be a cut in line with global peers.
Paul Allen there joining us from Sydney. And of course, as we're watching the ASX 200 at the moment, losing ground for a second consecutive session, we continue to see a lot of economic data across Asia today. We had industrial production numbers out of South Korea as well. We saw a little bit of weakness in those numbers, perhaps a reflection of what's happening in Samsung as well. We saw profits beating estimates, but at the same time, chip sales, that division, seeing a lot of weakness. We had industrial production numbers out of Japan as well, beating to the upside, but retail sales a little bit weaker than expected, and all to do, of course, with what's happening in the consumption, consumer spending side of things. We do have the BOJ rate decision today, not expected to move, but because we have a weaker Japanese yen, we'll be watching very closely what Governor Ueda has to say about the yen trading at that 153 level against the U.S. dollar. We're headed towards the worst month since 2016. And of course, overall, across Asia, we're following geopolitical tensions. We're following that North Korea ballistic missile that appears to have been fired. And we do have an emergency meeting in Japan happening right now, too, Haidi.
And you mentioned that so much of what we're seeing across these markets, tech-related, chip-related, is on the Samsung story, right? Taking a look at some of the movers that we're watching with these chip stocks, Samsung, obviously that heavyweight, seeing a little bit of weakness there, but perhaps not as much as you might expect given the concerns that are ongoing within its chip division, typically the biggest contributor to profit. Perhaps there is a little bit of optimism there that, despite that miss on expectations in that part of the business, we did see net income rising thanks to a lift in smartphones and wearables as well, but certainly that gap when it comes to catching up to the likes of SK Hynix, to Micron and HBM is growing ever starker. Even SK Hynix, though, off by just about over 1%. There, Tokyo Electron also seeing some softness. We did have AMD overnight seeing the worst rout in 2 years after its AI growth numbers really disappointed. That stock was down 11%. It expected to generate over $5 billion in sales from AI accelerators this year, but clearly the markets, at least some parts of the markets, had been expecting that bigger bump. And usually when it comes to AMD, we would be looking at what TSMC does. But of course, with the typhoon concerns over there, the lack of trading in the Taiwan market, we won't get that reaction. TSMC getting like 5.5% of sales from AMD. So one to watch when that market reopens. More ahead on the Asia trade. This is Bloomberg. Take a look at what we're watching across Asian markets with a lot of risk, political, geopolitical, earnings-related, AI sort of expansion-related among them. We are seeing broad downside there when it comes to Asian equities across the board. That decline coming from tech. We had tech also weighing on US futures there as well. But of course, that disappointment when it comes to Samsung's chip efforts and that part of the business is weighing heavily across some of these big chip names broadly across Asia as well. We are seeing a bit of weakness there and caution for the Nikkei 225, given we're going into that Bank of Japan decision as well. We're also looking at some of the data points when it comes to retail sales in Japan, as well as industrial production there, and taking a look at really what we're seeing there. That retail sales number in particular, seeing that contraction of over 2%. Industrial production there looking perhaps a little bit better, but certainly putting a bit of a question mark, particularly, Shery, in light of the ongoing political uncertainty and also, some of the geopolitical developments of this morning on what we can potentially see from the Bank of Japan.
Yeah, a busy day for both the government and the Bank of Japan today. Japan is holding a national security meeting after North Korea fired a suspected intercontinental ballistic missile toward waters off its east coast. Bloomberg's Japan economy and government reporter Alistair Gale joins us now. Alistair, what do we know at this point?
Well, of course, there's never a good time for a North Korean missile launch, but this happens just as Japan's struggling to form a stable government. What we know about the missile is that the defense minister here in Japan said that it flew for 1 hour and 26 minutes on a lofted trajectory towards Japan. And he says that's the longest time that a North Korean missile has been recorded to be in flight. And the implication of that is that it has the potential to go further if it's launched on a more flat trajectory towards perhaps the US. So it does show that North Korea appears to be making progress in its missile technology. And of course, this happens as North Korea is drawing closer to Russia, which happens to be very good at missiles. So there may be some coordination there. As you say, the Japanese government is now having a crisis meeting to discuss this. So there's lots of interest in how far North Korea is making progress.
And coming at a time when Prime Minister Ishiba is very busy trying to get some support from lawmakers, we're now hearing that he's going to meet with the smaller opposition DPP party.
That's right. We expect a meeting this morning between senior leaders of the Liberal Democratic Party and the smaller Democratic Party for the People. And the LDP really needs the DPP's help to ensure a stable government. Ishiba and the LDP, of course, fell short of a majority with the coalition partner Komeito in the election. And so now they really need a smaller party, such as the DPP, to make sure that the government remains stable. And Ishiba is facing a vote in Parliament we think is going to come on November the 11th. The Parliament will vote for who will be the Prime Minister. Ishiba hopes that it's him, but he really needs the DPP support to make sure that that happens and to make sure that the government remains stable going forward. So the meeting today will be a chance for us to see whether they reach an agreement on coordination. The DPP has policy requests of the LDP. It wants things like tax breaks that the LDP will have to consider taking on board as part of its own policies. But now we are watching to see what comes out of that meeting.
Bloomberg's Japan economy and government reporter Alistair Gale. Our next guest expects Japanese stocks to remain volatile amid these major political events and, of course, a monetary policy decision today. Joining us now is UBS SuMi Trust Wealth Management Japan equity strategist Chisa Kobayashi. Chisa, it's great to have you with us. I mean, we are seeing Japanese stocks under pressure today, but initially after the ruling coalition lost its majority, actually it rebounded. So what are investors watching at this point?
I think the reaction on the first day after the election was quite a little bit surprising, but it's just only because, firstly, we had a past event of the election. Secondly, the market reacted positively due to the weaker yen. That's what's the initial reaction.
And we continue to have a weaker yen right now. What does that mean for the BOJ?
We think the BOJ decision today, they'll keep the rate on hold because of uncertainty for both US and Japan for the political reasons.
What will prompt them to move and when?
We continue to expect the BOJ to rate hike next time in December, and then another hike in sometime in next year.
How are you factoring in the U.S. elections right now, depending on who becomes the next president?
On BOJ decisions?
Yes.
We don't know yet. You know, the decision is for the U.S. election.
I guess in terms of what are we expecting on inflation expectations? Will the U.S. spend more? What will that mean for yields and the yen?
Yeah, but we continue to expect the Fed to cut the rate towards next year. So that remain on hold. So which means BOJ would like to keep on hold this time. But as long as we had an inflation environment in Japan and the U.S. Fed to cut the rate next year, so we continue to expect the BOJ to gradual rate hike towards next year.
What is the biggest catalyst when it comes to a sustained rebound or the sustained next leg of a rally for Japanese equities?
For the next catalyst would be like it depends on the election result, but in a very short term, if you had a Trump victory, Japanese is likely to positively react in a short term. But in the medium term, we remain neutral. We still expect inflation and wage growth structural reform going forward next year. But at the same time, strengthening of the yen towards next year, it will be a little bit headwind. But we will probably see wage growth next year, that would be the next catalyst for the Japanese equity.
Sector-wise, where do you see those opportunities?
We continue to like banks because it's supported from the structural reform, or the Japanese economy is supported by inflation and wage growth, which also supported the BOJ rate hike next year.
Do you like consumption stocks, given that we're expecting more spending, perhaps with so many cooks in the Japanese political kitchen at this point?
Yeah, we currently advising having a sort of balance between exporters and domestic stocks, because we still have, we expecting a stronger yen towards next year, but the exporters, especially U.S. economic environment is not, as bad as we getting out of all exporters' exposures. But at the same time, we started to recommend it gradually shifting towards more domestic stocks, because we are expecting real wage growth next year. We had 2 months of real wage growth last month, but continuous real wage growth into the next year. That should support consumption recovery.
We'll be watching the Shunto wage negotiations very closely. But every conversation about the U.S. stock market, the Japanese yen, the economy seems to be very much veered towards what happens in the U.S. economy as well. And you keep mentioning it as we watch consumer stocks as well. Why?
It's because, because, if you look at the GDP components, service sector is larger than industrial sectors. But if you look at the topics components, exporters are much larger than domestic sectors. So that's why Japanese equity tend to be quite volatile with the currency environment. So that's point we need to, we can't forget about the currency impact going forward.
How much do we need to focus on the geopolitical impact as well? Today we had potentially that North Korea ICBM launch. At the same time, we were really focused on the defense sector because Mr. Ishiba wanted to expand defense spending. That seems also a tricky sector to be watching.
Yes, but defense sector is, it has sort of they've gone to the different situation right now. They have a structural growth driver supported by government spending expansion. So that should be you have to be positioned from a long-term view. So, but geopolitical tension is the risk, remain the risk, but it's hard to justify within the, stock market. You can put in on money in a sector-wise, but in a total equity market perspective, it's hard to, it's quite hard to justify in the geopolitical reasons. We need to be in mind, but.
What about the tax implications? Because now with all of this horse trading within the Japanese government about what policies to include in the next economic packages, we're seeing all of this talk about Mr. Ishiba having to compromise on a lot of what he wants to do.
Yeah, but there is a several scenario that we can expect, for who would be the coalition party with the ruling party with the Komeito. But as long as we believe, as long as LDP lead, party, we remain they are prioritizing economic revitalization, including wage growth and inflation towards next year. So that if that remain intact, we expect a major political regime will be on hold or status quo, I would say. So which means longer term implication to the equity, Japanese equity will likely to be neutral, whatever the coalition party will be.
We do need to get that economic package approved by November 14th by the cabinet, right?
Yeah.
What do you expect to see there? Included in there, and what should be included when we're talking about sustainable wage growth, when we're talking about sustainable inflation?
It should be, we don't expect any, changing on tax perspective, but we like to see sort of more encouraging measures to spend. We don't know exactly what the package is likely to be, but we like to see more sort of consumer encouragement, encouraging consumers spending more. That type of the package is likely to be ideal.
Chisa Kobayashi, good to have you with us here in the Tokyo studio, Japan equity strategist at UBS SuMi Trust Wealth Management, as we look ahead, of course, towards the BOJ rate decision today. No change expected there, but subscribers can turn to the Bloomberg for more on that decision. Go to TLIV Go to get commentary and analysis from our expert editors. And Bloomberg TV would like to hear from our viewers, so we've put together a short online survey. So you have that QR code right there. Do scan it. Do tell us what you'd like to see more on Bloomberg Television and any suggestions that you may have. This is Bloomberg.
Looking at live pictures there from Taitung as super typhoon Kongray is moving towards Taiwan with a possible landfall on Thursday. Taiwan is suspending trading on its $2.5 trillion stock exchange on Thursday. Super typhoon Kongray has intensified as it skirts the Philippines and tracks towards Taiwan. It is now the third storm this year to disrupt stock trading. Taipei is also shutting offices and schools. Well, the Hong Kong Stock Exchange is opening an office in Riyadh and exploring cross-listing ETFs with the Saudi exchange. CEO Bonnie Chan told us exclusively that they're hopeful about a more fruitful collaboration with Saudi markets.
And we're very excited. So this morning we announced that we are going to open an office here in Riyadh. I think this is another step in furtherance of our overall strategy in the Middle Eastern region. And we have been having dialogues with our friends here for quite some time now. Of course, it started a couple of years ago. We have signed an MOU with the Tadawul Group. We've also recognized a few exchanges in the region, including Tadawul, Abu Dhabi, as well as Dubai financial markets, so that it will be easier for companies in this region to potentially explore a secondary listing in Hong Kong. But I will say that the kind of cooperation we have and the level of interest we've seen is just amazing.
Speaking of listings, I know there were 2 listings that are going on this week as well. ETFs are being launched on the Tadawul Index, tracking the Hong Kong Stock Exchange.
Correct.
Last year, the reverse happened.
Yes.
Let me just ask you about these new listings and how much you expect that it's going to mobilize capital into Hong Kong stock markets.
I think these listings are very important. First of all, mobilizing the capital, but more importantly, I think they're important in terms of building the awareness and familiarity, because at the end of the day, we're at the beginning of this journey, right? Yeah. So we need investors on both sides to gain more knowledge and familiarity with investment opportunities in the opposite direction. And therefore, last year in November, when we listed the first Saudi ETF on the Hong Kong Stock Exchange, that marks the beginning. And there were over 50 Saudi companies underlying that ETF, which were listed on the exchange. And this week, it's the reciprocation.
Exactly.
We have those 2 ETFs with Saudi underlying, with Hong Kong underlying, listed here on Tadawul. And I think that's another step, towards hopefully, a very fruitful collaboration.
Quick question about also just the general activity that you're seeing on the exchange right now, because it feels as though there has been a small pickup in IPOs recently. I know the past month, September, has been a busy month in terms of volumes. Is that momentum going to continue?
Oh, yes, absolutely. We are very happy with the return of mega IPO, shall we say. We all know that the last 2 years have not been particularly conducive to the IPO activities, and there's a global phenomena. But in Hong Kong, we first of all did a very big IPO in September for Midea, and it's a $4.6 billion IPO, which is the biggest on our exchange since February 2021, and the second largest in the world this year. And following that, we have already seen another couple of pretty big deals. And the important thing is the participation has been quite phenomenal.
Take a look at how major benchmarks across Asia are trading early in the session today. Of course, we had a lot of data as well out today with South Korea's industrial production contracting month-on-month and year-on-year in September. And this really perhaps being reflected with Samsung earnings, where we had profit rising, but at the same time, the chip sales division pretty weak. In Japan, we also had industrial production numbers rising and beating expectations, but retail sales rising just slightly. Take a look at how the Japanese yen is trading, because that will be a big component perhaps of what the BOJ will do next. We do have the rate decision today, not a lot expected, no change in the rate, but we're looking ahead towards when the next rate hike will be. And retail sales today disappointing, might really factor into that consumer spending idea here in Japan. That's it from the Asia trade. The China show is next.